What is good, NIO family? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with NIO, Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's going on with the overall market moving forward as we have very important data coming out for tomorrow. What the data is suggesting for the markets, what you should be watching for as time goes on. Let me just mention that right now, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo and deposit $100, you guaranteed 5 free stocks. Deposit $1,000, you're guaranteed 15 in total, and the offering is very soon in just about 3 weeks. Anyways, for NIO, we have this resistance at this 4.7 area, so I'll be watching this as resistance. If this breaks, we'll be coming back up towards 4.9 all the way up here. If we end up rejecting, we'll be dipping back down towards 4.45. If that fails us, if that fails us, we're going to be dipping all the way down towards 4.25. So the question is, what is NIO doing? It is trying to actually break to the upside, trying to get a bounce right here from a technical standpoint, especially after getting some good ratings. But whether or not this happens depends on a lot of different factors. So I'm going to talk about those factors first before I break down the chart. So first thing I just want to note is that Jerome Powell gave a testimony today. He did remind lawmakers of the Fed's dual mandate about how they have different commitments to, once again, trying to keep employment as stable as possible while simultaneously bringing down inflation. But it's very difficult to do that considering the fact that interest rates have to remain high and even higher for longer to bring inflation down. So there is some contractions being shown to the labor market right now. Jerome Powell didn't really comment on specific details about it, but he didn't really say anything else that was too significant other than that. He made it very clear that the Fed cannot keep rates for too long. They're going to have to keep rates high for an extended period of time, but not way too long to hurt the economy too much. And they're also not going to keep rates. They're not going to cut too early simultaneously because it's going to make them have to do work twice. So that's the reason why Jerome Powell is being very careful with his words. Moving forward, don't forget that for tomorrow, it's going to be Thursday, July 11th now. And now the focus is kind of shifting away from Jerome Powell. And it's going to be shifting towards economic data. 1 hour before the market opens, we have the CPI report coming out. This includes core CPI. We're expecting it to be around 0.2% month over month. Year over year, we're expecting it to be around 3.4%. And then for month over month, all items inflation, we're expecting it to be around 0.1%, not to mention around 3.1% for year over year as well. So we'll have to see what the numbers end up looking like. That's going to be very important as well. Can't wait to see what they end up looking like. So we're going to be looking at the CPI report once again coming out an hour before market open. Then we have initial jobless claims and a couple of Fed speakers like Bostic, but that's pretty much it. Nothing else is going to be too crazy, but this CPI data will be huge. Now, CPI is going to be the biggest thing. This is the only really major catalyst tomorrow. Everything else is minor, but this is pretty huge, like I said. The reason for that is because right now there's a bit of a downtrend on CPI. Right now, as you guys can see, the numbers have been getting a little bit better as time goes on. Same thing with May. You guys can see there's another improvement right here. The rate in which inflation has been changing is also decreasing. And this is what the Fed is liking. So the market is very optimistic approaching CPI. That's part of why it's pushing the way it is. I want to note that based off expectations, there's a high probability that core is going to be very close to what we saw from before, not really changing too much, showing some more signs that's kind of sticky. But for all items CPI, considering that gas prices relative to the month of May, they were basically the same in June. There's a good chance that that could actually be positive and we might not see anything too bad. So for what I'm looking at, it looks like CPI is most likely going to be very close to expectations. I find that to be the most likely possibility, which could fuel the market to go higher. Not a guarantee, though. It really depends on the data. The market is still, as a result, quite greedy. We're seeing greed making up the majority of sentiment. As far as NIO goes, I didn't see any new pieces of news other than the fact that it's been reiterated that NIO is opening its 11th power swap station in Norway. Once again, opening more doors for new architecture and more of these buyers. On top of this, Zacks analysts are coming out and they're giving some ratings for Li Auto, NIO, and Tesla. And right now, looking at the Magnificent Seven, they're seeing some positive remarks, at least for these moving forward. NIO is also once again giving us some decent numbers, and they believe that with all the competition going on, we have to be kind of careful simultaneously. But looking at other companies like NIO, with potential price cuts and such that were going on, and with all this competition, the future still remains very bright for all of these companies. It's also worth noting that for the short term, looking at economic hardships, there are going to be some tailwinds that happen, at least for the near term, but it's not all bad, at least for us moving forward, as the bulls will continue to roar. So I'm seeing a lot of positive remarks being said about the Chinese EV sector, how it's continuing to grow, and that's some good news for NIO. Also, on top of this, we have 43 million in volume. That's a little bit above average, whereas short volume is still kind of flat. And then simultaneously, we have Bank of America Securities giving us a neutral rating. Citigroup is giving them a buy rating, so that's actually some improvements. besides that, the price-price ratio is kind of flat right now, not really doing much. But then later on, do not forget that we tend to see more volatility on on Thursdays. 50% of the time we're green, and we tend to see more seasonality moves around 1 o'clock p.m. and also during the final hour of the day. So that's what I'm seeing, at least for now, when it comes to the way things are developing. For NIO, I just wanted to mention that we actually have this resistance at this 4.7 area. If we break through this, we'll be looking for basically a move closer to $5. If we end up losing support at 4.45, we'll be dipping, and then that'll take us all the way down to 4.28. Now, once again, guys, it depends on what CPI looks like for this to continue, but just know that we have a slanted inverse head and shoulders on you that's forming. And historically, CPIs have been quite decent for the last couple of months. So I'm a little bit more optimistic looking at gas prices that we're going to get a decent CPI. So this is once again favoring the stocks like NIO will try to rebound. I think going into tomorrow, there's a higher probability that NIO tries to push back up to about 4.8 and kind of consolidates, and us dipping all the way back down to like 4.45 to start dipping. I favor a little dip and a bounce as the most likely possibility, but this depends on CPI, so we'll just have to wait and see. As far as SPY goes, the chart is extremely bullish. It's just breaking out today all over again. So I'm going to be looking at a test very close to about 562. That's actually a level that's worth noting, just under that, so around 561.7. Break this, I think we're going all the way up to 564, so it still looks very, very bullish. And if we get a rug pull, we have to lose basically 560 to come back down to 558. But overall, we look more bullish, and the chart is favoring the upside, in my personal opinion. For Nvda, we're looking more bullish. We're trying to break out towards 135. If that breaks, we're going to be filling in a balance towards 137.5. If we're bearish, we're going to be coming back down to 131. The chart is favoring upside from a technical standpoint, so we'll see what CPI brings us. Bitcoin's in the middle right now. We're going to be testing 57,000. If we bounce off this, look for a rebound. If we lose this, we're going to be dipping back down. Overall, it's holding up quite well. For the QQQ is also on a very, very nice looking uptrend. If we continue to push, we'll be going all the way up towards 504, and that's actually looking more bullish in my personal opinion. This looks like it wants to go up to 504, 505, into the mid 500s. So I'm looking for some very, very nice looking price action right here. I'm going to be anticipating more upside for the QQQ, and it looks like it wants to continue to climb from a technical standpoint. So this is looking more bullish. It favors the upside. We'll see if that ends up being the case with all the data that's coming out tomorrow. For Aapl, if we end up losing 230, look for 228. And if we break past 232, we could be on our way for 234 and 235. Overall, Aapl looks more bullish. For Supermicro, we're looking a little bit more bullish. If we get a good CPI, we're going to be looking for 920 plus. If we get a rug pull, we're going to be dipping back down to 880. This chart's favoring the upside with a nice bullish structure, so I favor upside. So we'll see if that ends up being the case. Overall, it's looking pretty good. For Coinbase is also trying to push a little bit higher. If we're bullish, we want to see this breakout towards 224. If we're bearish, we want to see this dip all the way down towards 213. Overall, Coinbase is looking more bullish. Looks like it wants to bounce. So I favor upside a little bit more, but it's going to depend on CPI. So watch for that just to be safe. If Amazon breaks past 200, we're going to be going all the way up to 202 and 205. If we end up losing 197.5, we're going to be dipping back down to 195.5. We're in the middle as we have a range, but this favors upside. So watch to see if that ends up being the case. For Meta is once again also trying to push a little bit higher. We have a nice accumulation structure. I favor that this will be going all the way up towards 540. So this favors upside. If we're bearish, we want to see it lose 530 to turn back down. So we'll see if that ends up being the case as well. Microsoft is looking more bullish. It looks like it wants to be going up towards 468. We'll see if, depending on CPI. Google looks like it wants to go up to 194. It looks more bullish. GameStop is holding up. It's barely holding 25, so we'll see if we hold 25 or not. I would say 24.8. That's very close to where our 50 EMA happens to be. If we hold this, look for a rebound to the 25s. If we lose this, we're going to be dipping back down. Overall, we have a double bottom structure, and there is upside potential, so we'll see if that ends up being the case. And then AMC is kind of trading sideways. We have resistance currently around 5.32. So we're at 5.07. It looks to me like it might dip a little bit. It looks kind of bearish looking, technically speaking. It might go to the low fives. So we'll see how it goes. It all depends on CPI as well. So that being said, the market has lots of stocks that look bullish. Other stocks look kind of in the middle. So I think it's best to just give the market some time just to see how things develop. But just, just know that CPI is going to be the big driving factor for the markets. So we'll see what happens tomorrow before the market opens. With that being said, get ready for CPI. There's a big move coming, and peace out.